Good evening, everybody. It's really great to be with you this evening. My name's Helen Steers. I'm a partner at Pantheon International, and I'm the lead manager for PIN, which has just actually been introduced by Dan. So I've got a few slides I'm going to share. First of all, I'm going to tell you a little bit about Pantheon in general, the manager. Then I'm going to talk about private equity, but you've already had a bit of an intro, so I'll go over that relatively quickly. And then I'll talk about the investment trust that we manage, Pantheon International. So you should see on your screen right here an introduction to the manager, which is Pantheon. So Pantheon has actually been around for almost 40 years. It was established in London in 1982, and it is still London headquartered, but it's now international. You can see that we've got offices all over the world, from San Francisco, which is really the cradle of venture capital, all the way through to Hong Kong, Tokyo, and Seoul, because we invest very actively in Asia, as well as in the US and, of course, in Europe. Now, you'll see we've got about $81 billion under management, so quite a lot, but not as big as some of the very large active managers. The majority of that capital is actually managed on behalf of pension funds. So institutional investors that invest in our closed-ended funds. So these are not funds which are available on the stock market. However, since 1987, we have been managing Pantheon International, or PIN for short, which is an investment trust and which does private equity globally and invests both in funds, but actually also directly into companies. So we're a bit of a hybrid. We're not quite a fund of funds. Almost 50% of the portfolio is held directly in companies, and just over 50% is held in private equity funds. So just moving ahead, you've already seen a few of those logos actually, not quite the same ones, but these are all companies around us which have been backed by private equity or venture capital in the past. And these are all companies in our portfolio. So everything from companies you might be quite familiar with that have since IPO'd, but also companies that are still private. So just to pick an example there, ThyssenKrupp Elevators. So that was part of the ThyssenKrupp German group. It got taken out of that group as a carve out by a big buyout fund, and it's now sitting in one of our private equity funds. We've got some other companies that you might have heard of, still not public yet. And in fact, only about 10% of private equity backed companies end up on the stock market. The majority of the exit routes are actually to trade buyers or sometimes to other private equity funds. So as was mentioned earlier, private companies are staying private for longer, and actually sometimes or the majority of cases, they don't actually go on the stock market at all. So the only way actually to get access to these private companies is through private equity investment trusts or other sorts of trusts and listed companies that invest in private equity. We've already had a bit of a primer on what private equity covers, and I've got something similar here, but it actually shows us the investment stages and maturity of companies. So starting out with companies that are backed by venture capital, these are often founder or entrepreneur owned and operated, and they take small amounts of venture capital to get them to the next stage, which is then growth capital. Then a company can become the subject of a buyout with a much bigger firm taking them over. And then after that, they can be sold either to the stock market or to a strategic buyer, trade buyer, bigger group, or sometimes then to another private equity fund. So private markets have been growing really rapidly over the last few years. And if you just take private equity and you take it in sort of 2021, where we are today, we're sitting at about $5.3 trillion. But it's projected actually to more than double over the next 5 years. So in 2026, we believe that private equity will be worth probably about $11.1 trillion. So a huge amount of growth, 15% compound growth rate. And this is another way of looking at it. You can see that over the past 10 years, since 2010, private markets have been growing at a rapid clip of about 12%. And whereas in December 2010, they used to account for, well, just over 3% of the total investment universe, now in December 2020, they accounted for almost 5% of the investment universe. So there's been a big increase in private markets in general. Investment activity has actually been really robust as well. So there's been a lot of activity, although there's a small pause in 2020 because of the COVID pandemic, and you can see that on this slide, with a slight pause in activity or a slowdown. 2021 was very active, and in fact our pipeline of new deals, new transactions in private companies is extremely full at the moment. Now, what's quite interesting and has been commented on for some time is the fact that actually public markets are shrinking, not in terms of their actual value, because of course that's been going up over time, but in terms of the number of companies that are quoted on public markets. So the trend here, you can see quite clearly, has been down over a long period of time, and at the same time the number of private equity-backed companies has been increasing. And what this means is that actually the number of opportunities in public markets has been decreasing. The companies that are on public markets tend to be older, slower growing, and the companies that are still in private hands tend to be more innovative, faster growing, and younger. Now, we've mentioned a couple of times actually that private companies stay private for longer, and sometimes actually they never IPO at all. I've got 3 examples here of companies that started out by being funded by venture capital and then did actually IPO. And you can see that Amazon, for example, only spent 3 years as a private company and then it went public, but with a relatively low market cap. Google, now Alphabet, stayed a bit longer as a private company, had a slightly larger market cap when it went public. And Facebook, now Meta, of course, spent even longer as a private company and then had an even bigger market cap when it IPO'd. Now, this trend has been continuing, in fact, and what it means is that a lot of the growth that happens in that private stage. So in order to capture that growth as an investor, it's interesting to get in before the company goes public, if indeed it ever goes public at all. And private equity is finding lots of different targets for investment. It's not just about technology, although technology is a big part of it. It's also just about being in sectors which are being disrupted by technology and also by large secular trends. So what I've done on this slide is show that, in fact, looking at the different sort of verticals, business and financials, healthcare, industrials, consumer, you've got companies that are private equity backed, and I've put some of the examples in our portfolio here, that are really tapping into disruption, which is occurring because of shifts in consumer behavior and shifts in technology. And private equity is really good at finding these niches and really developing them, using both capital but also critically operational skills to develop these companies' businesses, help them grow fast, and then basically create value for investors. But private equity is not easy to access. I talked about how most of the assets under management that we manage as Pantheon is managed on behalf of large institutional investors. And these are pension funds, insurance companies, large family offices, endowments, foundations that can write checks that are very large, and they can put fairly considerable amounts of money into closed-ended private equity funds. They can do that across a lot of different funds and build up a diversified portfolio that way. They also don't mind being locked in for a very long period of time, and as was mentioned earlier, not being able to sell their assets. They find it often quite difficult to access the best private equity funds, but because they are large and well known, they can manage to do it, and they can handle all the complexity of the administration of private equity themselves. That's not so much the case with smaller institutional investors or with individuals, and therefore the structures that are in place, like a private equity investment trust, really help a retail investor or an individual investor have a part in this exciting private equity universe without having to go through the pain of trying to invest directly into private equity funds. And that really brings me to Pantheon International, to PIN. So Pantheon International, as I mentioned, has been around since 1987. So it's got a very long history. It's been managed by Pantheon for all of that time. It started out when it was floated on the London stock market. It started out with £12 million under management, and we're now in excess of £2 billion. So it's grown very well over time. And Pantheon International invests globally. So you can see here with the pie charts below, about 50% of our portfolio is in the US. We've got a good chunk in Europe and also in Asia, and then a certain number of global companies. Interestingly, as I mentioned at the beginning, we don't just invest in funds, we also invest directly in companies alongside some of our best private equity managers, and we also participate in the secondary market. So we will buy funds and companies from other investors, and we can often do that at a discount, which is pretty interesting. Our portfolio is well diversified by stage. So you remember at the beginning I talked about all the different stages of private equity. We have a certain amount in pure venture, but we've got much more in growth capital and in small and mid-market buyouts, which we think is a really interesting part of the market because it's less efficient and there's more value actually to be created. And then if you look at the industry sectors, so we tend to be in the more resilient sectors. Almost half of our portfolio actually is in information technology and in healthcare. And although we've got a chunk in consumer, a lot of that is in consumer services. So for example, e-commerce or online education. So just moving on maybe to talk a bit about performance. Our year end is May 31st and our half year is November 30th. So we're actually just about to announce our interim results. That'll be announced next week. So they'll be our 6-month results, which are published. But I thought what I would do here is show you the activity so far in this financial year and to show you our performance over 1, 3, 5, 10 years, and then since inception, which is actually since 1987. So we've got the NAV per share increase, and you can see over 1 year it's been a very impressive number there. The share price has also progressed very well indeed, and we've handsomely outperformed the FTSE and the MSCI over that 1 year period. Over 3, 5 and 10 years, you can see the numbers that are here. And then probably what's quite interesting is looking at the since inception number, because there over 34 years, we have an outperformance over the FTSE and over the MSCI World of over 400 basis points in the case of the FTSE. And we've been through various different cycles over time. We've been through, obviously through COVID, but we've also been through the financial crisis. We've been through the dot-com boom and bust, and we've been through the Asian crisis sort of several decades ago. So it's a trust, a vehicle which has weathered a number of storms and has still been able to perform, very well through these different economic cycles. Just looking at the performance to December 2021, so this is in the current financial year. So you can see here that we've managed to post valuation gains of 17%. We've also had a bit of a tailwind from Forex in that time because a lot of the portfolio is based in the US. And overall, we've been able to perform at this interesting level, sort of 20% to December. You might be wondering about the impact of COVID on our private company portfolio. And actually, we were very well positioned going into the COVID crisis. So in fact, if you look through the portfolio at our sort of the underlying investments, about 75%, so 3/4 of the portfolio had almost no impact from the pandemic, and actually in some cases was positively accelerated by the pandemic because of the fact that it was concentrated on areas such as e-commerce, online learning, or digital payments. We had only 2% of the portfolio that was in sectors that were badly affected. So, for example, companies that were in the restaurants, leisure, travel, or general hospitality businesses. And then we had about 25% that performed relatively well. But overall, we think the positioning, positioning ourselves into these long-term secular trends was incredibly valuable for the portfolio, and that's what's enabled us actually to perform so well over the last couple of years. Just a word on ESG, because it was mentioned at the beginning that private equity doesn't always have a great reputation. We've been integrating very strong ESG principles into our investment decisions and into our monitoring ever since inception. And you can see here the way that we screen deals in new company investments and new fund investments, the way that we do due diligence, and the way that we monitor is all done with a view to implementing the very best ESG principles. So finally, just sort of wrapping up here, what does Pantheon International do? Well, I suppose in a word, what we do is we make the universe of private companies publicly accessible. And we do that in a diversified manner. So we have, if you look at our NAV, about 80% of our NAV is in roughly 600 companies. And those are dispersed throughout the world and throughout the sectors that I mentioned earlier. So we invest both directly into companies, but also into funds. And this enables us really to adapt our investment strategy to whatever is going on in the world. It's well diversified in terms of the underlying companies, and it's very actively managed. So this is an actively managed private equity investment portfolio. I haven't mentioned our balance sheet, but we're in an extremely strong position. We have cash on the balance sheet. We have a completely unused banking facility, and that places us very well to be able to convert these investment opportunities that we're seeing at the moment. We have a long-established approach to ESG and also to diversity and inclusion. We're probably one of the most diverse groups out there, and we've got a very strong, completely independent board of directors, not affiliated with the manager at all, who all own shares in the trust and who take a very lively and well-informed interest in the works of the trust. And I think that probably brings me to my conclusion. So this chart shows the long-term performance of Pantheon International since inception, since 1987. You can see there the NAV progression, the net asset value over time. That's the dark orange bar. You can see there the share price, which is correlated, I think 95% correlated to the NAV. We do trade at a discount. We believe that discount is actually quite unwarranted, given the performance we've been able to post and given the robust nature of the trust. It's actively managed, it's balanced, it's well diversified. It's a liquid trust with over 2 billion NAV. And we think it's an extremely interesting way for investors to access all the exciting opportunities in the private equity space. And with that, I think that's probably my last slide. There's a few disclaimers there, and these slides will be distributed later, and you'd be very welcome to obviously ask me some questions.